Morning. Hi, I'm Rick House. I'm President and CEO of Reunion Gold. And Reunion Gold is a exploration and development company operating in the Guyana Shield in South America. And we've got a very exciting project called OKO West in Guyana, which is moving through its early stages of development.
Rick, really good to speak to you. Welcome to this interview. We're talking about gold. The thematic is the gold rush. And of course, we all saw the gold price spike of around $150 an ounce at the start of March. Just this week, we've hit $2,200 per ounce in gold. You're the president and CEO of a gold company. I'd love to get your perspective on what it means. You know, what has changed in the last month, and what are you hearing from shareholders?
Yeah, I think in terms of the market, obviously we're very excited to see that movement in the gold price, but I think it's been forecasted to occur, and I think the underlying macro activities are really driving it, particularly the move away from the U.S. dollar as the reserve currency of choice, I'll say, has been one of the key reasons, and particularly the reserve banks buying up gold as the alternative to holding U.S. dollars. I think that's been the particularly key driver recently in the gold price move, and certainly central banks are at an all-time high in terms of purchasing gold. We haven't seen this similar investor uptick in investing in gold, and that's interesting to see that dichotomy. We typically see gold prices climbing and investor activity around ETFs, particularly ETFs in gold ETFs, climbing as well. That hasn't actually happened recently, and it may just be a lagging effect and might occur once people see the sort of underlying drivers for the reasons for gold price to be moving this direction. But
and once the gold price doesn't go back down, once it's jewelry buyers, for example, are famously averse to jumping in on price volatility. But once it settles down, they come back in. So perhaps the ETF or the investor might come in when they realize that this is a kind of a new base. I know you've had kind of a company-specific news, but have you had a new style of dialogue with any new potential investors? Or there have been a lot of conferences in the last couple of months. Have you seen any new entrants to the market?
Well, we're certainly, we get a fair bit of attention just because this quality of an asset. There aren't many of them in the sort of this scale and quality out there. So I would say interest is always surrounded this project from an investor point of view. I wouldn't say necessarily there's a lot of new. I would say maybe there's people in the generalist space starting to position themselves more around the potential of an interest rate in decline, and then that would be an opportunity to move into the gold space. So I think certainly had conversations recently with some generalists who were expressing their belief that, the right time to take advantage of this arbitrage between gold equities and gold price movement is really subject to the interest rate move downward as a trigger for it. Or at least that's the sentiment we're hearing. And so we're hoping that's a pent-up demand that'll jump in at some point and express itself in terms of buying, interest in our company stock and others, obviously, that are sitting similarly, relatively trading under what they should be relative to the gold price. So
that's the arbitrage that you're referring to.
Yeah.
You feel that the equities haven't moved in the same way that the gold price has.
That's what we're observing. Yes.
Good. Well, in February, you put out a new resource, 4.3 million ounces at 2 grams a ton in OKO West. Tell me a little bit about that resource, kind of what springs to, what are the points that you try to make that stand out about this resource?
Well, two things. I think one is to understand that we really put a maiden resource estimate out June of last year. So it's really only about 8 months since we put that maiden resource estimate, and the ounces have grown by about 38% from that resource estimate. So when we released that one back in June, we were talking about measured 2.7, indicated of 2.7 and inferred of 1.8 million ounces. 2.7 and 1.8, which added up to 4.2 million ounces. This one is a 38% increase in those total ounces. So we're almost combined, indicated and inferred around 5.9, and that fast, I'll say, growth in the ounces is really indicative of the deposit itself and the continuity of the deposit and our ability to add those ounces through just relatively pattern drilling, if you want to call it that, and on a spacing that supported inferred and of course indicated conversion as well. So that drilling program, was 60,000 meters that we added. So we now drilled a total of 150,000 meters on the deposit, and we're adding ounces at sort of $8 to $10 an ounce. So it's very inexpensive ounces. And the other nice thing is that continuity, obviously showing consistently throughout the drilling programs that we've done, is the conversion of inferred to indicated has been in the order over 100%. So everything that we have drilled out has come out, when we've drilled the indicated spacing, convert that inferred over the value of 100%. And that reflects in that grade as well. So the open pit grade, because it was an open pit inferred resource, open pit indicated inferred resource back in June, has gone up about 12% in grade just on the open pit itself. And the other point I would make is that we've now added about a 1.1 million ounce underground resource. So as part of that 5.9 million ounces, there's now 1.1 million ounces of underground, grading around 3.12 grams per ton. So very exciting that that's all worked out as we, not now from our perspective, as we had thought it would, but you never know until you drill it. And so it's paid.
You've got 1.6 million ounces in the inferred category at a quite considerably higher grade than the indicated. The grade for the indicated resource is just over 2 grams a ton, but the grade of the inferred resource is coming in at 2.6 grams a ton, and it's quite a difference. But you talk about kind of a conversion, a slightly 100% conversion, but how does that work if you're going from a high grade in the inferred to a lower grade in the indicated?
That's the focus of the drilling program on this updated resource, was really the deep extension drilling of the Block 4 zone, which was the kind of higher grade zone in the open pit. And so that's why and so what we've added is inferred ounces in the deep extension underground, going from about bottom of the pit to a kilometer depth. So the bulk of the inferred ounces now is this new drilled out zone from below the pit to the kilometer depth. So that's what brings the grades of that up. And of course, we've converted the open pit material that was about 60% indicated and 40% inferred to. It's now 90% indicated in the open pit. And that's the infill drill that we did to bring that to indicated. And so that grade came up about 12% when we did that on the open pit. So
does it feel like this is the kind of the shape of the pit? That's the kind of the logical shape of the pit, or has the deeper drilling kind of changed your mind a bit? Do you think it's going to pull down, and particularly with the gold price move?
Yeah. So in the resort, I still sort of stand by what I had said earlier, that it's an exercise where we have to optimize that. We'll do that as part of the PA, but every indication would be that I see that the pit won't be down to the resource pit shell depth of 640 meters. It will be closer to 500 meters. We think by the time it's all said and done, that will be the combination optimum of the open pit underground. So it's an exercise in doing that optimization analysis once you complete all the estimation requirements for things like the underground mining method and costs and the open pit design and all the factors that influence that, to get essentially a block analysis on the contribution of each at each elevation, what the contribution is between the open pit and the underground. So there will be an optimum in there. It'll be definitely somewhere above the bottom of the resource pit shell.
Gotcha. So what happens now? You're trading at a valuation of around $370 million US, and if you take roughly 6 million ounces of your kind of combined resources, which one shouldn't do, but you're kind of trading just north of about $60 an ounce, probably just south of $90 an ounce if you look at it on the kind of the indicated resource. It's not a bad valuation for an exploration company. Are you growing the envelope now to try and kind of capture more ounces, or are you going to kind of de-risk what you've got?
So we're fortunate that we have a good cash position. So we're in parallel and dual track, really continuing the exploration work and the drilling. We've got 8 drills active on the site, and they're continuing to drill on the Skyruti zone as well as on the new exploration targets that we've identified as part of our groundwork on geochem and geophysics work that we've done on the property. So there's about 4 or 5 targets that we're also going to drill out. So the answer is we will not stop the drilling programs to continue to expand the existing resource and hope to find satellite sources as well, and in parallel with advancing and de-risking. And I think the thing I wanted to maybe make the point about is, yes, if you look at this from an enterprise value per ounce basis, it may well sort of be middle of the pack if you want in terms of valuation, but I think it's the differentiator. One of the differentiators with this deposit is how quickly it's moving from discovery to potential production, and therefore that time value of money to me is worth a lot in terms of the way that other projects are moving. And having to carry the overhead costs of the corporation while they move their projects forward in timelines that are probably longer and immediate valuation.
Articulate for me, if you will, what you mean by that timeline movement.
Well, it's just from the time an investor takes their money and decides they like what they see and they invest in some asset or some company's portfolio or single asset in our case. I think they typically don't know when that asset's going to translate into cash flowing business, number one, or transaction if there's a transaction that happens with the business. So they're holding the stock in hopes that one of those two things translates into some upside in their investment down the road. And if you look at the Lassonde curve, it moves up and down over that Lassonde curve, but depending on where you are in the cycle and whether you're continue to explore and add ounces or you're pin the ounces and now you're just de-risking and advancing, and then when you come out with your engineering studies and so on and so forth, all those things affect how the market movement is in the stock. But relative to the ultimate goal of most investors is to either, get a return through someone acquiring the property and paying a premium for the asset, or vice versa, it going out all the way to its timeline to production, which then turns it into a cash flowing asset and then eventually realizes what the real cash flow is coming from that business translated into the share price. But in our case, we have the opportunity to move this along very quickly. So whichever pathway it ends up, somewhere along the lines, this is going to be a producing mine, and I think fairly quickly. So that translates value for shareholders.
What do you mean by, specifically by you can move this along quickly? You know, what
Well, a number of things. I mean, the country is supportive of mining. It's a mining jurisdiction. The assets, quality assets, so it's financeable and fundable. I'll call it. We don't having a problem, moving things forward because we've got no money, which is the case for many projects out there today, especially the junior developer space. So. This one, we're sitting with a good cash position. We can move the studies along. We can move the permitting along. We can move the exploration along, all in parallel. And we can, in a supportive jurisdiction, get the project up and running fairly quickly. Again, usually what delays projects is permitting. Typical permitting timelines are often 5 to 10 years, and the average life of a project today is about 16 years from discovery to production. And then we're looking at doing that in 6 years. So that's almost 1/3 the timeline that you would see typically in our industry. So
6 years from 6 years from discovery, which was
discovery, the 2021.
2021. So you've got in your mind a kind of a production schedule 3 years from hence, 2020.
Exactly. Yeah. I mean, that's right. So even though we haven't released a PEA yet, which would surprise most people, that we're talking about perhaps being in construction next year. So the reason that we are is we're even advancing the studies more like a pre-feasibility study, calling it a PEA because we've got inferred ounces in the underground, and we'd like to incorporate those inferred ounces into the PEA. But subject to only that factor, really, the level of engineering and studies that are being done are really supportive of a pre-feasibility. So
okay, that's why you mentioned the trade-off studies, because typically that's done once you've done your basic engineering, once you've got your kind of techno-economic. So in that case, you must be expecting a PEA quite soon.
Yeah, PEA would come out in May. It was a couple months away here. Is what we're looking at. So everything's progressing there on schedule, and permitting is well down the track as well. So we're moving things along quite well. Sorry, go ahead.
You mentioned that you had a good cash position. Could you just kind of remind me roughly where you are on that?
Yeah, well, at the end of the last public
reported
number was 72 million, and at the end of December, in terms of cash, we had, in September, had raised $70 million through a bought deal, which sets us up well for what we've got to do leading up to a construction decision. We also have warrants, which are in the money right now, warrants that are coming due in July, which would bring another 25 million in. So between the warrants and the existing cash that we've got, we think we've got sufficient funds to take us pretty much all the way through to construction decision.
Interesting that you talk about the kind of the warrants being in the money, because looking at your share price chart, you were at a high in September. It was obviously a really good financing, and then you had the whole Guyana, Venezuela shenanigans, plus the kind of the sell-off in gold equities in Q4. So you're not back up to your September levels, but those warrants are in the money, you say?
Yeah, those were warrants from the 2022 financing the company did.
Okay.
Not the 23. So.
Okay. 8 rigs running, technical team working. Where are you doing the studies? Are these based in Canada, the kind of a lot of the study work?
Well, the company that we're working with is G Mining, and they're based in Montreal. So they're,
okay. Yeah, of course.
And very familiar with the Guyana region because they've been involved in projects over the years in Guyana and Suriname. So lots of expertise. They're familiar with the region we're working in.
And they've just built a gold mine in Brazil.
That's right. Yeah.
So not a dissimilar scale.
Similar, yeah. It's a little about 175,000 ounces on average, I think.
Yeah, but that'll give you a good benchmark. You'll get the good benchmarks on mining costs and trucking costs.
Exactly. Yeah.
Good. So really, it seems to me that the next kind of key news item will be that PEA in May, and then am I right in thinking drill results through the rest of the year and conversion eventually of the inferred ounces in the underground into indicated so that can be incorporated into a PFS?
Yeah, that's pretty much it. I think the exploration activity is kind of re-ramping up again because we were, all of our drills were really focused initially on this recent drill program to get those underground ounces to outline down to a kilometer. Now we're moving drills into the exploration target areas over the course of the next 6 months. And with a few drills that'll stay on, as you say, the program to convert to inferred to indicated in the underground, and continue also to drill the depth extensions below block 5 and 6 in that Karuni zone, which is open and we won't drill below block 4. We've gone down to a kilometer, but we will drill below blocks 5 and 6, which are further to the south. So they similarly seem to show high-grade shoots, much like block 4, but smaller, that are extending down, sort of plunging to the northeast. So that's what we're trying to follow down, those higher-grade shoots. And they're up, closer to surface. They're about 190 meters below. That's where the drilling is now. It's about a little less than 200 meters below the surface. So these could add to the underground ounces as well, or pull those pits down in blocks 5 and 6, one or the other, combination thereof. So that's why we're continuing to explore the Karuni and add ounces to the Karuni, as well as look for these other target areas we're focused on.
Good. Now, your background plus the kind of the technical services group of G Mining, together, I've got no doubt that you guys can build a mine. But you also spoke about kind of corporate activity. You never know when that's going to happen. But with your experience, just looking at let's call it a 6 million ounce mineable resource, it might be bigger. How would a major look at that? Would they say, look, we need to mine this over 15 years, and therefore it's whatever it is, 400,000 ounces a year? And is that relevant? If it's 300,000 ounces a year, is that irrelevant to them? Is there a threshold on size and annual production which you feel that a major kind of really perks its ears up?
Yeah, I think any major is looking would be eyeing this from the perspective that could this be a tier 1 asset for them, and if it is, it's not just what have we discovered, but what's the upside potential that exists on the property. And I think, of course, looking at G2 to the north and what they have, I think, that a major is going to think about it from the point of view of consolidation of the total camp and the ounces that might be there. So you looked at both. Right now, we're running about 8 million ounces with what G2 is thinking they're going to come out with in their updated resources, about 2 million ounces. But so if you add those two, it's about 8 million ounces. So, and they're close to updating their resource. And I don't know what the number is. They were at 1.2 million ounces on their last resource update. So anyway, from a major perspective, I think they that's a scale. If you look at the ounces and it can be incorporated into one processing facility, that they would probably look at this to see if they can create a 400,000 to 500,000 ounce producer, at least 15 years, maybe 20-year life. If they could get there, that's kind of the target range. I think that puts it into tier 1. Yeah, I'd say they would be looking at it from that perspective, and I would fully support that's a good way to look at it, because we're early days on the exploration side. There's a 23 kilometer long strike length to that whole shear zone that we only tested the top 2 kilometers on our property. They've really only drilled out the top 2 kilometers on the other side, on the other boundary side of where we are. So that's 4 kilometers out of 23 kilometers that are fully sort of tested now, and the remaining kilometers still haven't been tested. So I'm sure there's going to be more along that shear, as there is in these typical greenstone deposits. So,
how much of the shear have you got to the south from your?
we have four. Far south of Caroni, we have about 4 kilometers or 4.5 kilometers, and they have probably 17 on their property, of which they've really only tested about 2 of them right now. And they're moving to the north, so they're starting to test probably another 2 kilometers north now. So yeah, it's early days in the exploration side, and then even in the western part of our zone, we've got a number of targets now and geochem anomalies that we've identified that are potential sources of alluvial activity to the west of us, and there's these alluvial gold mining activities that are been going on for years, but the source has never been determined where the source of that is, and based on the drainage of the area and so on, it looks to vector back to the western part of our property, which is not
the shear, so it's something else.
Yeah, something else. Yeah, it's somewhere in the western part, because the shear sits on the eastern side of a drainage basin, and this is on the western side of that sort of peak elevation, and everything flows to the northwest. So,
well, goodness, there we go. So we'll keep an eye out for the PEA in May, and ongoing drilling results, both from exploration and from kind of de-risking as well. Those are the key things to look out for.
And maybe just the only other thing I'd mention is we had the Baric Agreement that we settled in December, and so really that held us back from. While that was in dispute, or while that was sort of waiting court proceedings, we weren't able to really, acquire new properties and add to our land package around OKO, because that would have potentially resulted in us having to put that into the joint venture. But now that that's resolved, we can go back to that, and we've. We're looking to add around our own OKO West package some additional prospective ground, and also further afield in Guyana, a number of new properties that we've been researching, I'll say, and we think very highly prospective. So we think within the next month or so we'll be announcing some of those new exploration properties that we'll have in our portfolio. So, and
talking of Baric, do you have any strategics on your shareholder register?
We have Baric, of course, at about 6%. And really, the rest aren't corporate strategics. That only in Dundee. Dundee Resources and La Mancha has a pretty good sized stake as well. So those certainly are the larger shareholdings by Dundee and La Mancha, and Condire are the 3 top shareholders.
Great, Rick. Thank you so much for taking the time to talk to me. And go get them. Keep drilling. That's a really nice discovery cost per ounce, and keep advancing.
Very good. Yep. Thanks very much, Marlon, and have a great week and weekend.
Will do.
Take care. Bye-bye.